I'm Stuart Rubinstein. I'm the CEO of Akoya. Akoya is an independent entity owned by 12 of the leading financial institutions. It was started inside Fidelity Investments and spun out into this independent company co-owned by all those firms February of 2020.
And then Akoya has your own personal mark on it, obviously, which is based on a lot of experience, I know, over the conversations we've had. Can you talk about your history, your personal history with data aggregation and how that's evolved over time?
Sure. Zach, as you know, I've spent almost all of the last 30 years in financial services and been in digital financial services since the mid 1990s, if you can believe that, really the beginning of it. What we've seen over time, and especially the last two firms where I was, Fidelity, and then before that, I spent a long time at TD Ameritrade, we saw tremendous growth in the amount of screen scraping that was performed on customer accounts. And that's alarming. Consumers absolutely have the right and need access to their data and need to provide that to third parties for various apps and activities they want to do, including what the polls were talking about just a little earlier. What they don't have, though, is the right to give someone else access to a financial institution's systems. And it's a problem for a number of reasons. Financial institutions need to know who's connecting to their systems, need to protect that, and need to really understand, is that activity actually even authorized by the consumer, or is it just authorized by someone who happened to get the credentials of that consumer? And this is troubling for a number of reasons. Back in last September, the FBI noted that the number one attack on the financial sector is actually credential stuffing attacks, criminals using credentials that were stolen somewhere else and testing them at financial institutions and gaining access to consumer accounts. So that's that's a problem. So what we did was, like a lot of other financial institutions, at Fidelity, we said, hey, why don't we fix this solution for ourselves, and we'll build an API, be more secure, we'll know the consumers are granting access, and then we can have third parties, come and collect the data as they need to provide services for our joint customer. What we realized was that's nice for one institution to do that, but to really make it work for the industry, it's a network problem, right? Every institution directly negotiating with every data aggregator to flow data back and forth and to sign agreements and to decide what data fields will be in that API is a big task to negotiate on a one-off basis. When you're doing it across multiple institutions, multiple data aggregators, multiple fintechs, it creates this whole network problem that there's not enough resource anywhere to actually do. So we said, well, this is a network problem. Why don't we apply a network solution? And that's how Akoya was born. Akoya was born to be that network solution. Create trust in the way consumers access data by actually instructing their financial institution to provide access to this particular third party. We call them data recipients. Have the consumers not share their credentials with anyone so that they have that, more of a feeling of trust, and to provide a means for the consumers to monitor and remember who they actually granted access to, and means to revoke that consent at any time.
So I think I'm hearing loud and clear from you that the focus on consumer permissioning also has evolved over your career. I want to hear from your perspective, like, how has it evolved for consumers? And even though everybody in your seat in this event has talked about consumer permissioning, are they really doing that? Are consumers really thinking about who do I share my data with and who am I not?
Yeah, I think consumers, are beginning to realize that sometimes, and especially in the way it worked in the past, right, that they're trading off security for convenience. When they use fintech apps, right? If they use a peer-to-peer payment platform, they're giving away their ID and password for their account because they want to split the check with their friend, right? They want to pay their babysitter, they want to send money to their kids. for all of those things, or they want to populate. I worked at a brokerage firm, right? They want to populate their tax return with their trading data, and they'll want to input every trade, right? There's one, it's easy, it's convenient, and there's a high risk of data entry problems if you do it all yourself. Mm-hmm. What I don't think consumers realize is that by giving away their ID and password, they may be inadvertently giving away access to more data than they actually plan. Right? If you're just moving money, you need an account number, routing number, maybe a balance check, right? You don't need to give someone access to all of your accounts at all of your institutions. And you have no idea that's going on. The other thing is remembering that you actually did it. So a lot of folks will use a popular personal financial management app. They'll sign up for it, what we call their accounts, and then they'll stop using it. We've actually found a lot of these consumers, we've asked them, did you use this app? Yes. Did you stop using it? Yes. What did you do to stop using it? The number one answer we get is, I stopped using it. The number two answer we get is, I deleted the app from my phone. Yeah. But neither one of those two things breaks the connection. Mm-hmm. But the consumer always has their money, right, at their financial institution. So we believe that the financial institution, and some have already done this, should be providing a dashboard where the consumer can see, here are all the apps you have linked to your accounts. You can see that. Maybe here's how often they access, right? But also here's a method to disconnect them if you don't want to use them anymore. Or at some point, maybe to reconfirm that you do want them connected. It's a means just to protect the consumer and remind them who has access. And we really believe that has to be done, at the financial institution. The same way, Zach, that if I walked into your bank and said, hey, Zach's hosting a conference today, but I know his name and his ID and his password and his date of birth and his social, so just tell me his balance and his last 3 transactions, I'll go tell him. If I did that in the branch, right, 2 things would probably happen, right? One is that we get thrown out, and 2, they would call the police. But that's what happens online every day. We need to fix that. We need to know, yes, Zach has told the bank that Stuart can come in and check his balance. Then we do that. Zach gets reminded that Stuart can check his balance, right? And Zach has a means to say, no, stop that guy from coming in, please.
I like that. So Stuart, you talked about, what were the words you used, like bringing a network solution to a network problem. Will we get to the point where we're fully independent of screen scraping? And I guess, can you tell us, I love your perspective on where you think we are with sort of API rollouts and direct relationships.
Yeah, I think we've seen some big announcements from a few very large institutions and some large data aggregators on signing API agreements. Some of those have been implemented. I think the stat from FDX, Financial Data Exchange, is still between 65 and 85 million customers are still sharing their login credentials to access fintechs. Mm-hmm. So while we have some big announcements from some big firms, we're in the first or second inning of a 9-inning game. We have a long way to go. I do think that we're making great progress. I do think that the network effect is really important here. We need a network where mid-tier financial institutions don't need to sign access agreements with every aggregator. Every aggregator doesn't need to sign access agreements with every institution, but they can all do it once and plug into a network. We love the standards that Financial Data Exchange has set, so everybody knows how to code once. APIs are wonderful for that. We all know how to code once, so we're making great progress at FDX, but what we don't have yet is standard legal agreements. We don't have standards around liability, and the tough issues standards on every data field that everyone has agreed to supply. So we want to make sure that people know what they're going to get. So I do think we're on our way. Akoya is helping to enable that. Well, we have a lot of large institutions as investors, right? They're really running Akoya as a utility for the entire financial services industry. Mm-hmm. So, for example, you probably saw that we just announced that Jack Henry is on our platform, right? That brings 400 smaller banks and credit unions to the platform, right out of the gate, right? Gets the long tail. So work like that, we're talking to the other core providers, but work like that gets us to a point where I do think we can make significant progress and maybe not totally eliminate screen scraping, but bring it down to a minimum. It benefits everyone. Nobody wants to hold credentials if they don't have to, right? That's a big risk. And everybody wants to know what data they're getting, have it in a standard format. There's a lot of expense in gathering data by screen scraping, and I believe we can take a lot of that out of the market.
Understood. A couple of years ago, I know in our coverage we were talking a lot of people who worked in the industry were talking about democratization of data. I guess really just a general question: does data need to be democratized, and what are the cost benefits for doing that?
I love the word democratize because we've been saying it for the last 20 years in digital, actually, I guess more than that, but in digital financial services, democratize investing. You can go back to the 70s when Charles Schwab was founded. It was all about democratizing investing. Digital's been helping us do that, and we're making progress on that every day for over 2 decades. Right? It's about providing consumers the best possible service by the improvements. Experian Boost is a perfect example of that. From the earlier conversation, getting someone's credit score increased by accessing different data, right, and having the consumer basically get that data linked up to their credit file. So I think we can get there, but we have to make sure it's not reserved only for the largest, customers of the largest institutions. The largest institutions have the ability to put in the resource, right, to put people on the problem and they get their data connected over to Experian in that example. We need to make sure it could be done for customers of all institutions. That's where we think, network effects come in. Data, access, that's one example, but data access is a key driver of innovation in the financial services industry, yielding, many benefits, but making it easier for fintechs to connect and obtain the data they need in a safe and efficient manner is going to yield us more products, better products, really more access for everyone. But there are always costs associated with improvement, right? And the industry, has been slow to change due to some tough issues. Right? One of those tough issues is around, I mentioned just a minute ago, liability. Mm-hmm. Right? What happens, in an open finance world when something goes wrong, right? And in financial services, right, things go wrong. That's where the money is, right? That's why criminals focus there. The CFPB put out their advance notice of proposed rulemaking on Section 1033 of Dodd-Frank, earlier this year, and we're hopeful that if rules are promulgated by the CFPB, that they will address liability. We believe we have a very straightforward approach on liability. We believe whoever in the chain causes harm to anyone else in the chain, whether it be to an aggregator that cause harm to a financial institution, that cause harm to the consumer, whoever causes that harm just needs to make good on it, right? And that's, how we think liability should be assessed. We don't think it should just keep getting pushed down to one party and every party shouldn't bear any. It should be, you caused the harm. It's like a car accident, right? If it's deemed your fault, it's your fault. If it's deemed half your fault, your insurance company pays half, right? It needs to be the same way to make it, fair for everyone and for everyone to have a clear view, to be able to connect fast and move quickly in the direction of innovation.
So Stuart, let's bring it back to Akoya, because I know in some of our first conversations, there was a nuance there. I think I remember even asked you, wait, you're not an aggregator, right? So you're a data network. And I guess, can you talk about what the differences are between a data network and a data aggregator?
Sure. Data aggregators, the way other data aggregators work, as I understand it, I don't work for them, but they perform multiple functions. Not only do they move data from point A to point B, but they often provide other services on top of the data. And sometimes package it up and do other things with it, including analytics and credit scoring, other types of things. We don't do that at Akoya. We left that space for everyone else. We literally are in the data transportation business, right? In that network to get it from point A to point B. Think of us like the post office, right? When you use the post office, the way it's supposed to work, right? You're supposed to get there fast. But when you use the post office and you mail a letter to someone, you expect that to get there unopened, right? Sealed and private. That's what Akoya does. We pick up data, we deliver data. We do not open it. We don't look at it. We don't analyze it. We don't scan it. We don't keep a copy of it, right? We don't aggregate it with other people's letters, right? We just move it from point A to point B. We may standardize it so everyone knows what format they're getting, but that's it. And then we delete it. We do not write it to disk, right? So we are truly a network. There's no aggregation. We're not collecting. We're not building. There's no honeypot. There's no data store. We have keys and tokens, so we know what to get next time. But we don't collect the data. But because of that, we also leave a lot of room for others in the industry to provide those value add services on top. We're just trying to connect the folks who need it with the folks who have it and bring that all together in a very standard way.
Got it. That makes a lot of sense and well explained. Let's zoom out a little bit and given your perspective, where do you think the demand for data is leading us as an industry?
The first comments were on open banking, right? Open banking is very quickly evolving into open finance. Of course, I came from the non-banking side of the world, so I've always been thinking about open finance anyway. But aggregation is extending into all sorts of new use cases, and I think they're limited by folks' imagination and access. So we started with simple things like bill payment and and peer-to-peer payments and stuff like that. But we've also been using personal financial management for years. I remember way back when, early 2000s, my first meeting with the folks from TurboTax. The meeting lasted like 15 seconds. They go, we'd like to be able to import your transaction data from your firm into TurboTax to fill out the Schedule D. And my immediate reaction was, well, of course, that's such a customer benefit for our customers. We have to do that. Right? We just had to figure out how to do it in a safe, secure way. But now there are new use cases coming up, right? Now you include payroll data, right? So you get income verification, employment verification. It's great for mortgage applications. So we expect to see, more and more use cases evolve as people think about the data. And we're talking about finance data today in this conference. We're starting to see it in the healthcare world. Like data's been locked up in electronic medical record systems, EMRs for short. And customers go from one doctor to another doctor. They're not in the same hospital system. They need to move their data. So we're going to start to see the same thing in other places. I think it's really exciting to unlock data. The more it gets unlocked, as long as we keep it safe, right? But the more it gets unlocked, I think the sky's the limit.
And so who are the nodes on the Akoya network? If Akoya is the data network, obviously it sounds like you can work with data aggregators. If you're just the post office here, would you also be working on both other ends of the data providers and data consumers as well?
Yeah, so anyone can be a node on the Akoya network. I think there's a lot of co-opetition, in the space. A data provider would be anyone who hosts data that someone else wants. So a data aggregator or even a fintech who has data. Think of a peer-to-peer payment data. They have a lot of transaction data that a consumer may want to use now somewhere else. A retailer who has a lot of transaction data that consumer wants to use and analyze somewhere else may wind up being a data provider. Payroll company we just mentioned. On the recipient side, it might be another financial institution, right? They have checking accounts. They also want to sell mortgages to people who have accounts at other financial institutions.
Sure.
Might be a data aggregator who is enhancing the data and applying a lot of advanced analytics to it, or normalization, categorization. Or it could be a fintech. So it could be anyone on the network. So it is a true network, right? Plug in, you might be a supplier, you might be a recipient, you're likely to be both at some point.
Right. I think we have time for one last question. And, what was interesting to me is when you described Akoya, you talked about sort of this consortium model that you're owned by 12 other financial institutions, you said. So I guess why build it in that way? And what are some of the opportunities and challenges of being able to bring in all those organizations to the board and your management?
Yeah. So we started it we didn't start building it that way, right? We started building it as an entity owned by one financial institution. We went out and we started meeting with lots of others. And what we found was for it to be a trusted network, it needs to be independent. Right? Everyone thinks one financial institution is trying to get a competitive advantage over another one. And that wasn't the case. We built it actually technology-wise, we built it separate from the institution where we were. But everybody thought about it and said, if you really run it like a utility and you want all the parties around the table to trust it, let's just make it independent from everyone. So you get a real independent feel. It does feel like a fintech. Yes, we have a board of all of those people. So we answer to them about product direction and and how we spend our money and things like that. But it gets the most trust around the table of being independent from any others. On the opposite side, there are challenges, right? I have a lot of bosses. And we want to get everyone around one standard. And, so there's a lot of consensus building in a consortium. It's not like, okay, here's how we go. It's, hey, let's discuss that and move it forward. But I think it gets at the end, it might take us a little longer, but I think it gets the best ideas moving forward and gets a lot of input from a lot of experienced people around the table. So we're happy to have all of the folks around our table. Each one of them makes us stronger, makes us better, makes us smarter. So it's worked out really, really well.
That'll be a model that's replicated by other firms participating in sort of cross-institution, cross-industry data.
I think we've seen it in a lot of places. I think FDX is another great example of that. It's not, it's run a little differently, but a lot of the same folks are at the table there. We look at FDX as setting standards and Akoya as implementing standards. So there are a lot of similarities. But when you have people represent the different parts of the ecosystem at the table, you get a lot of the best thinking.
Wonderful. Stuart, as usual, it's great talking to you, great learning about Akoya and your perspective on the industry. And thanks for joining us at DataDay 2021.
Yeah, my pleasure, Zach. Thanks so much for having us.